Hi and welcome back. I'm Theresa with Finder Financial Services, and today thought we would chat about insurance and the different types of insurance that occur with your mortgage. So you might not be sure about why there's so many insurances. Some are mandatory, some are optional, or you can kind of choose different features attached with them. But we'll just go through, and there are four that usually occur. So first is home insurance. Obviously the mortgage is secured to your house, so the house and the land. If your mortgage, is secured to the house and the house burns down, then there's no security for the mortgage. There's nothing for the lender to sell in case you stop making your payments. So you do need to have some sort of home/fire insurance to prove to the lender that that house is secured and it's not just going to disappear one day. CMHC insurance, so it's called mortgage default insurance, or CMHC insurance, or Genworth insurance, and this is the insurance provided by essentially the government, or Genworth, which is a private insurer, and it protects the lender in case you stop making your mortgage payments and they need to go somewhere for someone to pay them back for the mortgage. So obviously their recourse is to come and get your house and to sell it, but if there's any shortfall or anything like that, they can get it back from CMHC or Genworth. So that is mortgage insurance to protect the lender only. It doesn't actually protect you. However, it just means that your lender is very secure because they don't have to worry that their mortgages are uninsured. The third one is title insurance. It's relatively new on the market. Title insurance actually protects the title or the deed of your house. So say you bought a house, somebody committed some fraud, you weren't allowed to use the house the way you thought you were allowed to use it. Maybe the person you bought the house from did some renovations without proper permits, and it comes around to, now that you own the house, you've taken on all of these liabilities with the house even though you didn't know about them. So if you buy title insurance, the title insurance will actually cover that and protect you. So it's mandatory with most lenders currently. Very few occasions it's not mandatory, but in general it's actually a very good thing to have. So it costs you maybe a couple $100 depending on the value of your house, and it's very, very efficient thing there. And the very last one is mortgage life or disability insurance, also called creditor insurance. Essentially, if you God forbid die or are disabled and you can't make your mortgage payments, the lender is still entitled to those payments. It doesn't mean that they're going to just forgive your debt, unfortunately. And if you've got a family, or if you have children, or if there's two people supposed to paying the mortgage payments and one of them's unable to, then if you don't have enough money to make your mortgage payments, you might be in some trouble. You'll have to sell your house. So in general, you have to at least knowingly accept or waive mortgage life or disability insurance, but it's not mandatory. You can choose to take it, you can choose to waive it, but you just need to keep in mind your personal situation and whether you really need to have this or you're okay to waive it for yourself. So yeah, that's all we have to talk about insurance today, and I'll catch you next time. Bye!